It's about that time of day again. My name is Joseph. It's Tuesday evening, December 6th, 2016, and this is your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish and trading at the high of a bear flag tonight. Even the S&P is bullish and trying to retest the all-time highs once again this week. Gold is still trading inside a range, and buyers are still waiting patiently to buy the low of that range. Euro is bearish in the short term as price pulls back off yesterday's high. We've got a bull flag on the euro, and the FDAX is bullish, but this move higher today is so aggressive that buyers are likely to take some profit on the trade and start looking for a place to buy at a cheaper price. But we got a great setup coming for tomorrow. We've got lots of reliable trading opportunities. We've got a great video for you guys tonight. Before we jump into our charts, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at Sideways Markets. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link over here to the blog at Sideways Markets and watch the full-length version with all 5 markets and all the analysis. While you're here, please don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download those charts right below the video tonight on the blog. There's a link there to download all the charts you see me using in tonight's video. In the upper right-hand corner, don't forget, grab a free pass. If you're not a member here at School of Trade, grab that free pass. You're going to learn more with me in 1.5 hours on the free pass than you will anywhere else on the interwebs. I can guarantee you that. And of course, don't forget, if you're brand new here to the SOT community, get a great frequently asked questions page on the right-hand side. Learn the who, what, where, when, and why. We're known as being the industry leader in day trading education. And please don't forget, I'm always standing by here, guys, to help you guys out 24/7. Hit me up on the live support button on the right-hand side of the website. Hope you guys had a great day today. Boy, setting up today, lots of great tradable opportunities that we talked about in last night's newsletter. If you missed last night's newsletter, you definitely missed some fantastic opportunities today for a Tuesday session. But you know what? We're only as good as our last trade here, so let's get ready for tomorrow. Tomorrow's Wednesday, December the 7th. First of all, any news coming out tonight? We have some relatively important news coming from our friends down there. The GDP from Australia at 7:30 p.m. tonight. I don't expect that to be too big of a market mover going into tomorrow's session. I think the big news will be coming shortly after midnight from China. We've got merchandise trade balance. Usually that comes out sometime between midnight and 2 a.m. Eastern time. If you're trading the overnight session, you want to be aware of that. It'll probably bleed into tomorrow's London session as well. Speaking of the London session, we've got major news at 3:30, 4 a.m. tomorrow morning in London, so make sure you mark your calendar for that tomorrow morning. If you're with me tomorrow in the trade room, we open up the trade room at 8 o'clock Eastern time. We don't have a lot of news here tomorrow in the U.S. morning session, but we're going to hear from the Bank of Canada tomorrow morning at 10 a.m. We'll see how these prices of crude oil are affecting the Bank of Canada. We'll hear from them tomorrow morning at 10 a.m. We got the old JOLTS report, right? My gal Yellen, that's her favorite economic indicator right now, the JOLTS report, job openings, layoffs, and transfers survey. That'll be a big one tomorrow morning at 10 a.m. And of course, don't forget, if you're with me tomorrow morning, we're trading crude oil in the trade room. For all you crude traders out there tomorrow, don't forget, get the inventory report at 10:30 a.m. Eastern time. Remember, give that inventory report a 15-minute buffer, 15 minutes ahead, 15 minutes afterwards. I always tell my traders on Wednesdays, right, we got the inventory report. It's going to be important that we trade around it. Get those trades early or get those trades late in the morning. Don't try to wrestle that petroleum status report. Remember, the initial move off those inventory reports are almost always a head fake. So give it a few moments after the news comes out. Find that new direction. And remember, those news events, big news events like the inventory report tomorrow, oftentimes create spikes in the market. Those big spikes create spike in ranges, spike in channels, spike in wedges. We'll be doing all this tomorrow morning in real time with all of our students here, so come out and join us. We'll talk about the news tomorrow night in tomorrow night's newsletter. I do want to give you a heads up here. This Friday, mark your calendar. This Friday will be the final newsletter for me here of 2016. I'll be coming back to see you guys in January on Tuesday, January the 3rd. So it's been a fantastic year. I always like to take the last few weeks of the year to build some new stuff here for our business here at School of Trade and make sure we invest our time at the end of the year to make sure the next year, we take some time to review this year. We take some time to prep for next year. So please be aware, this Thursday, December the 8th will be the final newsletter of 2016. I'm not going far, though. I'll be working with all of our students here, of course, at School of Trade. My last newsletter of the year, right, will be Thursday evening, and of course, getting ready for Friday's session. So make sure you're aware of that. We got, of course, tomorrow, right, and Thursday. I'll be coming back tomorrow night for the newsletter tomorrow night, and again on Thursday night as well. But the last newsletter of the year for 2016 will be Thursday, December the 8th, of course, going into Friday's session. I'll take a bit of a break, right? Regroup, reflect, right? Refocus, and be ready here for 2017. Get any questions about that, let me know. Don't forget, big news tonight from China. Tomorrow morning in the U.S. session, we get the inventory report. And again, make sure to mark your calendar, right, for the end of this week here. It'll be the last few days of the nightly newsletter here for the year 2016. I'll come back and talk more about that in tomorrow night's newsletter. Let's jump right in here tonight. Thanks for waiting around. I know I'm a little bit late here this week on the newsletter. It's this time of the year. You know, this time of the year we're reviewing what happened this week. You know, this year, and kind of regrouping here, getting ready for the beginning of next year, and of course getting ready for the holiday season. So let's jump right in here. We got crude, S&P, gold, euro, FDAX, got it all covered here for you guys tonight. Crude is bullish and trading at the high of a bear flag after completing a triple measured move this evening. The buyers have control after a strong move lower today, but it's hard to find reliable buying opportunities at this level of resistance. So the most reliable buying opportunities will likely be either a breakout pullback above the channel high or buying the low of that channel tomorrow. Sellers, on the other hand, may be waiting for this price to come higher so they can just sell it back down to those lows again tomorrow, right? And the most aggressive bears will be selling the high of this bull channel, while the most conservative sellers will wait for the failures at the low of this channel. Real quick here, a couple things you can see. Very strong move lower here today. Whenever we see a real strong move in one direction, we know the odds are still quite high that we're going to go back down and retest that low. We saw a higher low, right, middle to late morning this morning, and when that higher low occurred, right, that gave us a rising support trend line, and it looks like sellers just simply couldn't recover from this. So obviously the first thing we see is this big strong move down, and whenever we see a big strong move, and we had a great day, we had a great session today with our traders in the trade room selling that move on the way down. And again, whenever we see a strong move in one direction, we expect at the very least for the market to return back to the extreme, at the very most, right, to see this turn into a measured move. So right now the sellers have their objective to go back and retest today's low. At the same time, we're keeping an eye out for a measured move, A, B, C, and D. Now keep in mind that measured move down here at 49.72, it's probably not going to end up being 49.72. We're going to have to wait and see what this looks like tomorrow. But as of right now, the A to the B leg is the most important thing. Depending on how high, right, we pull back off this, that will determine, right, exactly where that measured move is. So it may be 49.80, maybe 49.90, right? Just make sure you're aware that measured move is the long-term target here for those bears. So short-term target, going back down to retest that low. Long-term target, obviously, you got $50 a barrel down there, right, the prior month high. But the objective here will be, right, that measured move as it goes lower. With that said, we also have, again, like I said earlier, we have that higher low coming off of today's very dramatic move lower. That higher low, of course, creates what really is collectively known as a bear flag, right? So spike down turns into kind of a bear flag, and you know, when you see a situation like this, again, we know the sellers are still trying to retest that low, so that's definitely going to be, right, part of the game plan for tomorrow. But really what you want to be thinking, whether you're a bull or a bear right now, is you want to be thinking about these edges, either the top of the channel or the bottom of the channel. Now let's play this game, you know, what if. We'll play the what if game. If we do go higher here, if you're going to be a buyer right now, right, buyers really need to see a strong break higher and really hold above the high of that channel. Now, I'm going to use the term breakout pullback to describe this, because the term breakout pullback in my definition of the term means a successful break higher that can hold a pullback to the moving average. I like to use the moving average as an easy way to really define how much strength is needed to break through the high of a bull channel. Now, if you're sitting there going, wait a second, break through the high of aren't we supposed to buy the low of a bull channel? Absolutely, you're exactly right. So this is definitely going to be, right, the more aggressive side of this. Now, we've got inventories tomorrow, so this may definitely happen, right? We may definitely see this thing spike and try to run up and retest, right, that high here. Just be careful, though. Be careful trying to buy high here. You really want to see that strong move up. How strong? Strong enough to get that moving average up above the high and then be able to hold that pullback. Once we see that pullback hold, right, then it's a matter of time, right, of getting that market up, right, to retest that high. One thing we'll look for, obviously, is the breakout pullback. Another scenario you want to keep in mind here, too, is if it does break out, a lot of times buyers aren't going to want to buy high, so keep an eye out for kind of a spike in range and then buy the low of that range. The key is just don't chase the spike higher, right? Get the spike, get some strength, but make sure you get the pullback. Make sure you buy low. And don't be surprised here if it runs up, but buyers don't feel quite the appetite to buy high, right? So find those swings, right, and focus on buying low for that retest back to the high. So buyers here buying the strength through the high. It would be a whole lot easier as a buyer, though, to buy the dip, right, back down to the low of that channel. That obviously would be the more reliable place to buy. Now you're not buying high, so just watch out for if we don't get that strength, right, going through that high. And again, you know my definition of that breakout pullback, right? Get that moving average to conform bars. If we don't get that strength, then obviously we want to focus on down to those lows, right? Seller failure. This, of course, where sellers are looking for seller failure, breakout pullback, right? And then be a buyer, right? And then be a buyer right here. Now, that's really about all we're probably going to get there for the buyers on that pullback, because anything that pulls lower is likely going to fall apart here for the bears. We talked about the buyers. What about the sellers? If you're a seller right now, the most aggressive sellers are picking off these highs right now. You have to remember, whenever we see a real strong move down, like we said earlier, the odds are very high that it pulls back to attract sellers, and eventually the sellers outnumber the buyers, right, and the market tumbles back down. So you have to imagine right now there are sellers who have been selling each of these legs going higher, right, knowing that eventually, again, not every time, but the odds, the law of large numbers says, right, that we'll retest that low. So there are already long-term sellers in this market, but as far as short-term sellers go, they'll be looking for the exact opposite of what those buyers need, right? So price goes up, the buyers want to see it hold that pullback. Well, that's exactly what the sellers are now looking for. And obviously, this is a great place to be a seller, but it's a little bit tough, right, to kind of get the cajones you need to sell into a move like that. It's trading with flags. We're going to see one on the euro as well. Flag patterns are one of the most difficult because they really put you in an uncomfortable position. So, excuse me about that. So buyer failures at the high of that channel, that's where the most aggressive and obviously the most lucrative sells are going to be here. Just make sure, though, you don't sell into that strong spike, right? What you're looking for is you want to see the market kind of just jump out, pull back, right? And that's the one that you want to be looking at, right, to be a seller, not the one that jumps like this, right? I don't want to try to selling into that move. That's going to be a little bit too difficult to get other sellers to participate. Now, the other one, which is a whole lot easier to wrap your head around, comes at the low of this channel. At the low of this channel, this is where those buyers, right, are going to be trying to buy that low. This is where it's always a little bit difficult. And what I like to do is, when it comes to a flag, you know there are going to be buyers trying to buy it. So what I do is I look for traps down around the low of this channel. So think about it this way. As we go lower, just trying to sell that breakout pullback is going to be difficult unless it simply falls apart here, right? Obviously, if this thing just tumbles lower, then clearly there's no question about what's happening right now. But assume now that we go back to the low, buyers are now trying to buy into that low. This is exactly the game that we want to be playing. Look for traps.